On the SPYs, we started to roll over a little bit in the afternoon, but never really went far. Came in and tested this area here from Friday morning, and this morning just gapping up to Friday's highs. So we continue to see extremely low volatility. We're right up here in this area at the all-time highs. Quite amazing. So continue to fade those pullbacks on the SPYs every 50 cents. IWM continues to show more intraday volatility. This one actually topped out 136.75, bottomed out about $1.30 lower, so it was a nice 1% intraday move. I mentioned in the big picture comment something. I probably posted this chart a few times in the last couple of weeks. Just really long consolidation. Here's the weekly. And I think this could go on for another month easily. This move here from 115 to 138 is actually was historic, probably the largest move in that short a period of time historically. And so I could see us popping around, even if we popped up here, going back into this range for at least another month or so. Somebody asked yesterday why I wasn't making a lot of trades in IWM recently. I think one of the important principles, and I think we've covered this as we've taken our mentoring courses, and from time to time I perhaps mention it in the morning meeting, but no matter what time frame you trade in, whether it's minute to minute, hour to hour, day to day, or week to week, one of the worst things you can do is take trades in the middle of a range. You have to have the discipline not to do that, where the risk reward is not good. And so, when IWM is in the middle of this range, I don't really want to take trades. It comes back down into the 130, mid 133s here, this area here down to 134. Absolutely, look to get long. When it gets up to 137, or preferably even a little bit higher, 137.5 to 138, get short. Those are really good risk reward trades, and you can see, work a number of times on the short side, and work a number of times on the long side. So, core is down $5. I thought the revenues for the quarter was a little bit light, and I thought the guide down was not that severe for 2017. So it seemed to be reacting a lot. We know this one we played Q1 last year on the gap up here for potential long-term change in what's going on in it, and it did come all the way back, kind of broke this longer-term downtrend, and perhaps looked like that was it in terms of a longer-term bottom. Right after getting up to 60 there, the next quarter it gapped down and made a higher low here, so we watched to see if it could make a higher low and then kind of break its way, and it never did that. It kind of made its higher low, came back up to this area here in the 50 area, failed, started to roll over again, and now it's gapping down to here with the earnings.
It's on my radar, but
So far,
yeah.
So, right over the open, maybe I'll look for that. But other than that,
sellers took control on the break of 38, steady consolidation here, supported 36.70, never could get above 37. So we have sellers in complete control, and looking like it might test this 36 by the open. Oops.
yeah, well, I'm interested to see what goes on right over the open. So I might
It's 37 level to trade against, which is great in terms of knowing that it was sold here in the pre-market. volume picked up here. It's traded over 600,000 shares in the pre-market. They're on a conference call right now. It's 30% of its average daily volume. It's going to be very in play. There's probably going to be a couple of nasty wicks in the first 15, 20 minutes, but there should be at least 3 or 4 good trades in it. From an intraday trend perspective, from a scalper's perspective, I imagine there'll be a lot more. Right now, though, you want to be short. Even here, where it broke down below 36.70, it came down to 36.30, popped back up, and there are people waiting to sell it right into where it broke down from. Now it's about to make a new pre-market low, it appears. 36.25 bids getting hit, actually absorbing the drop. SABR. They're on a conference call as well. They had a large guide down for the year. This one, unfortunately, is not trading in the pre-market, so we're not getting any data.
And then kind of like, once you get the first down move, you basically draw a line, like where that move stops, draw another line where the top is, and that's basically the range you want to short close to the top of the range. And when it cracks the bottom end, that's confirmation. I think the way I'm going to approach this one is if it does crack, I'm going to look through this one. I think I just missed right now. It dries, and the other three are going to be like intraday stuff.
It does seem like it's a large enough guide down to bring this area down here into play. You do have this gap down from November 2nd. So that must have been the last quarter's earnings, which took it to 23. They popped it to 25 before rolling it all the way back down again. So perhaps we will get a little bit of a bounce on this one into 23, 23.30. It's a little bit of a guessing game, obviously, because we haven't done any volume in the pre-market. That would bring us 23, 2 points below. In this area right here, 23.30, 23.40. Would be a gap down about a half of the EPS guide down, so it's definitely possible. And you're short here from above 23, looking to see if it comes back down all the way to 21. It's a very nice risk reward. It normally does 2.3 million shares. If I look at the daily, when it's busy, it's actually done 8 to 10 million. Last quarter's gap down, it did over 10 million, almost 15 million. Extremely liquid stock. So I like this one today very much as well. We just need to get some more data when the market opens. EMR by a little bit. We look and see, recently it had come into $50 a share. It was accumulated there for a while. Had a great move up to 56. Pull back and consolidated for a while. And broke out again. Now it looks like it's starting to get steeper. So it's probably getting into that potential profit-taking territory. So, although now, you go back, you get some upside here from a couple of years ago. Let's see here. 64, 65. So this is about 2 years ago right here. So right now it's capping up $2, which is 3.5%.
Similar. Also got AMD on there, right?
Guidance was raised 3%. So let's watch and see what it does here against this 62. Holding above 62, you can look at the long. Holding below 62, look at the short. Okay, AMD I was going to actually talk about anyway, even if it didn't have fresh news, because the move has been so unusual. And what I said after the close to Kenny yesterday was this, for stock to go from like $3 to 13, which has been like a dead stock for years. It's a competitor to Intel, makes chips, has never done really well, but it's tried to compete. For it to have a move like this and get back to levels that it hasn't seen since the financial crisis and then the internet bubble, there might be something going on with the graphic processors, which, for those of you who aren't familiar with the story, in the last year, there's been some huge strides made in machine learning. We've seen that primarily we've seen that in Google Translate has gotten like 100 times better in the last year or two. Alexa, that thing from Amazon, now Google Voice or Google Home. But apparently this machine learning, which is in everything, we actually, even looking at it in some of our quantitative back-end software for building models, it's these GPUs are what allow it to work. And so that's NVIDIA's why NVIDIA's gone from $20 to $120. Now AMD is the #2 player there, and I'm sure people are looking at this. More people obviously caught on recently with this move right here, but who knows? You know, maybe the stock goes to $15, $20, $30 a share. Certainly that GPU story with the Intel story today is going to bring more people's attention to it. It's traditionally been a thick stock that doesn't move that much. These moves the last few days are extremely unusual. $10 to $14, a 40% move in a matter of days catches your attention. When NVIDIA started to do this down in the 25 area, when it got up to the high 30s and we looked to short it, it never really went down. And maybe it went up to 50, then had a pullback. Then it went up to 70, 75, had a pullback, but it just kept on going. And so, this stock trades 58 million shares a day. So we're now looking at a stock that might be a lot more volatile on an intraday basis and is extremely liquid. So this becomes interesting as a short-term trader. We haven't had a stock that's this liquid potentially start to move in this way in a long time. You can see yesterday it got above 1266, which had been the prior high, and trended up $1. Now it's gapping up this morning. So we'll watch the first move kicks down into the 1360s, see what happens there. But it's become a new momentum play, and we have no idea where it's going to stop. Okay, Hasbro. I've talked about this general principle a lot, I think during earnings season especially. Stocks don't necessarily trend all day. They establish important points and then range through them. That was the idea with Hasbro. It was moved up so much right on the open. I thought once it got above 95, it was pretty extended. And so that gave us the opportunity right on the open to short it for the spike above 96. Came in quickly, a couple of dollars right here. And then when it came up to 96 again, I had my offers ready to go, because very common pattern is you put in the high on the open, or the low for that matter. It works its way back up. People think it's good, and then you get a series of lower highs and it pulls back in. I used this down move to the opening low to get flat here. I was considering reshorting it back into the 95 area. It did actually get above 95. And all I'm really doing is trying to trade a range that's, well, actually did come off from 95 after 3 attempts to break above. Came off $1, so there was a little bit of money there. So we have now 95, 95.20, support 93.80, 93.50, and then obviously if it's going to break out in the longer term above 96 over the next few days, next week or so, would be the longer term breakout. People looking for it to go to 100. Tiffany's. Tiffany's, I think we talked about maybe it being down a little bit too much in the pre-market, but by the time the market opened, it was already back up above 78. Once it got to 79, became more of look for failure potential, maybe a little bit of a short. It did pull in the first time from 79, got back, made a higher high here at 79.5 before rolling over again to the morning low. So it was range bound. Thursday support held on the open twice. Never rolled over back down to 76. So it seems like the market's treating the news as a non-event. Some people thought it was a positive. I read some people thought it was a negative, bringing in a new CEO. But regardless, the price action showed the buyers that were here last week in this area, they stayed there on the open, tried to roll over again, they were still there. 70, below 77.60, then you could start to think about it rolling over. 79 is pretty good resistance for now. He's asking about Fox A. It's down a penny right now. Stifel raised their price target on it. Wedbush raised their price target on it. RBC. Most of the analysts raised their price targets $1 or $2 on it. So the quarter was solid, I guess. And looks like it ran up quite a bit into earnings. Can't hold above 31 on the open, probably a better short. Yeah, I guess, I mean, look, it's run up a lot into earnings. So even though the numbers were solid and they got similar to the situation, I guess it's like a mini version of like a Facebook or Apple the other day, where it just looks like the good earnings were anticipated already. Okay. And then you'll see there is some of the low floats still in play. We did see that dry ships, which I shorted the other day at 630, 640, went down to 4. That caught a bid and worked its way up here from 4 back up to 6. So we'll watch this on the open here, this area, 6 to 630. And the other one, AVXL is a complete scam stock. One day we'll be out of business, but it's managed to make a nice comeback as well from the 4 area. Rounded up. And this one is actually easy to borrow now. You don't have to even locate it. So here's where we made a lot of money when it ran up to 14 and came back down to 4. After that, twice it went up to 8. So you got to be a little bit careful trying to short it as it starts to move higher here. 6 is kind of the spot where you start to see if there's a potential failure. That's it. Be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.